Is there such a thing as a safe haven for your money? Hi, everyone. I'm Maggie Lake, and I'm talking markets today with Noelle Acheson, author of the Substack Crypto is Macro Now. Hey, Noelle.
Maggie, so good to be with you. How are you today?
Great. I love heading into a weekend with you. And so does Paul, who says, two lovely ladies on a Friday. Thank you, Paul. It's good to see you
Thank you,
all
Paul.
in the chat. And Robert. Hey, Robert. I was just talking about you. Your ears must be ringing. But we're gonna talk about a lot of interesting things. Your Substacks have been fantastic and really coinciding with a lot of what I've been thinking about. But I do want to start on the macro side of things because there's a lot going on there as well, and in particular bonds, because we've seen yields on the 10-year treasury, that's the benchmark government bond that all other rates are keyed off of, hit a 3-month high this week. They backed off. We saw a little bit of subdued action today, both across the board with every asset class really taking a little bit of a breather, but there was a lot of volatility this week. Why are we seeing this action in yields? What are you paying attention here? Because they're moving in the opposite direction of the Fed, who's been trying to push rates down, at least with their last meeting, in
They're
the
al-
other direction. So what's happening?
they're also moving the opposite direction, and if you notice, to rate cut expectations. The CME's futures are now pricing in a 95% probability that we'll get one cut. The day, like 2 days after the election, the day after the election, which is, in my opinion, totally insane. Yields are telling us we're not going to. Yields started climbing the day of the double cut in September. So yields are saying
Yeah.
that maybe we got a bit over our skis there. Not a single data point has come in since then, also suggesting that another cut is warranted. And while there are some narratives and some anecdotal evidence, for instance, the Beige Book, that are suggesting the economy is weaker than the data, this is a Fed that is data dependent. They've said this many, many times. There's really not much call for yet another cut. And we've had several Fed officials over the past few days come out with the messaging. In other words, there's some coordination going on here. The messaging that we're going to go slow, and reading between those lines, they would be sensible to go slow in November. We also have to remember that the day after the week of the election, markets are going to be volatile
Mm.
anyway. And I'm sure the Fed isn't going to want to add fuel to that fire. So a sensible thing would be to wait until December and then see what comes out since then. Plus, they'll have a better idea of what kind of inflationary fiscal policies might lie ahead. However, yeah, the market rate expectations are not pricing that in, so there could be some market volatility ahead.
Yeah, I'm interested because you sit in Spain. I'm interested what you're hearing just internationally, because I know here, we're just inundated with news of the election, and people talk about being nervous. I certainly have had a lot of people that have come on the show that are really experienced market participants, investors, traders. They're sounding really concerned to me. And we know some big names, the Stan Druckenmillers of the world, Paul Tudor Jones, they've been sounding very cautionary notes. What's the vibe like internationally? What are you hearing from people?
Nervous. Everyone here is nervous as well because it's a very big deal for the entire world, especially if we're heading into a regime of tariffs, or especially we're heading into a regime of weaker US military influence. Either way, there's a lot of uncertainty ahead. I don't ever remember there being this much uncertainty, except perhaps in the aftermath of the 2016 election. And we survived those 4 years, and we've survived the 4 years after that, and we will continue to do so. But it's a question what the markets are going to be doing in the meantime. People here are nervous, especially in Europe, especially because of the currency differential. European economy is going very slowly, and over the past few days, we've had ECB officials fighting with each other in public over what the right pace should be for the cuts coming up. We know there are more cuts coming. Should it be slow? Should it be fast? And they're really getting kind of antsy or anxious, I would say, about the pace. And this matters because it affects the euro versus the dollar, which is very important for all sorts of trade balances, not even just the European ones.
Yeah, and we'll touch on the European economy in a moment because it certainly has been struggling. So one of the things I've noticed, so everyone's nervous about the election. Everyone's trying to figure out what tariffs mean, what the policies might be. Of course, we're not going to know that right away. Not a lot of people are bringing up the fact that we don't know whether we're even going to have an answer on election night. And Tommy Thornton reminded me that back in 2000, the stock market dropped 30% with that kind of uncertainty. Now, that's not saying it'll happen again because it was the first time we were ever kind of deadlocked and arguing about hanging chads and all of that. I mean, it's a distant memory for a lot of people, but that was a very unsettled time. I guess we have to sort of layer that possibility onto it as well.
And it's a very real possibility because arguably the acrimony right now is a lot tougher, a lot more intense than it was back in the year 2000. In the year 2000, I looked it up the other day actually because I was thinking along the same lines as Tommy.
Mm.
It took a month. The middle of December was when the finally was pronounced in Florida the winner of the 2000 election. December. That's a long time to not know who is going to be the leader of essentially of the free world. That was pretty intimidating. And we also have to remember that lawfare is now sort of part of electoral campaigning, which is a very disconcerting thing to realize. This the new normal. It wouldn't surprise me at all to see contested election, and then we have to worry about what if, even if it takes a month, even then it is not accepted. That's a very frightening outlook.
Yeah, and even though we saw that incident with Bush and Gore, it does kind of feel like we're in yet another chapter, unprecedented chapter, in American history, which is why we're talking about safe havens today, because I think against that backdrop, a lot of people are wondering, and that makes the moves in treasuries really interesting because it's where people used to go when they were looking for a safe haven. And now it seems like with all of this volatility, that's a big question mark as to whether that is advisable or a good idea. And there may be people who, as we close out the year, or as we're heading into the election, are nervous and maybe talking to their financial advisors and saying, what do I do here? Like, where is a safe place for me to protect my money or protect my profits? Um, what are you watching in terms of gold these days? Because that seems like that's been on a record run, and maybe that's where people are turning to rather than treasuries.
Definitely, because the treasury market is no longer the world's safe asset. As we've seen, the United States is increasingly weaponizing the dollar. And over here in Europe, another thing that we're watching and getting very nervous about is, again, the military influence. If there is no obvious leader of the free world, then what happens to Ukraine? What happens in the Middle East? These are all things that can exacerbate the conflicts that we're seeing around the world already. I read a statistic the other day that gave me goosebumps, and that is there are more state conflicts at the moment than at any time since 1946. And that is not a time you want the world's largest military power to have a power vacuum. So treasuries in that increasingly conflictive world are not necessarily the safe haven if we know the United States is quite willing to weaponize access to the dollar and to seize treasury reserves when it suits them. Gold is a much safer alternative, assuming that you're not keeping it under Wall Street, of course. And that's probably one of the many reasons we're seeing increased gold demand. We know central banks are buying, and we're also seeing a lot of retail investors buying now on the back of the assumption that more people are going to feel comfortable with gold than with treasuries. And we've seen moves in the MOVE index, which is the volatility index for treasuries. A lot of that is to do with the timing because it's priced on options that mature after the election.
Hmm.
But it's getting a little bit worried, and we saw this starting in 2020 when the volatility of treasuries just went crazy. Treasuries are no longer the safe haven, not as much as gold is for sure.
Yeah. But we always have to be gold's tricky, as a lot of commodity people will tell you. And I just want to flag, I know a lot of you have been interested in asking about that. And especially if you were in it, do you hang on here, or is it too late? What do you need to know about the moves that can happen in commodities? Rick Roll's coming on in a couple of sessions to talk through that. I'll let you know when we get closer. And Michael Cow, who uh once Urban Cowboy, if you follow him on Twitter, once talked about the difficulty of gold because you never know whether central banks are buying or selling. So I'm really interested to see if he's changed his views or how he's thinking about that, and whether he's looking at that as a safe haven. So I just want to flag those conversations coming up because I feel like we're going to be talking about gold all the way through this election. Hi, Taylor Reed. It's nice to see you again, too. Some questions coming in the chat, and I'm going to get to them in a second. But I just want to ask you, while we're talking about safe havens, let's just round out the conversation with crypto and Bitcoin, right? Because this is, again, supposed to be when it should be performing really well, maybe as an uncorrelated asset, but it doesn't. What's your sense of how it's been functioning as that? It doesn't seem like it when you
No,
look
in
at some of the
fact,
price action, but you tell me.
yeah, absolutely. You're so right. In the short term, gold has been outperforming Bitcoin. We never thought we'd see that day, but it has. And a lot of that is to do with the regulatory uncertainty emanating from the United States. I think this is overdone, in my opinion. Obviously, a Trump victory would be better for the crypto ecosystem, given his full-throated support, at least in terms of appearances, given his support for easier regulation and more support for clarity. Um, on the other hand, the Harris administration will probably end up being less hostile than the Biden administration was. So either way, there's going to be some regulatory clarity ahead. Although the Wall Street Journal report today on the moves against Tether are going to probably sow a lot of doubts as to whether the Harris administration actually means it. It's the regulatory uncertainty and the electoral uncertainty combined with that means that gold is actually a safer haven right now than Bitcoin. Although there are two caveats to that. One is that obviously they both kind of are influenced by interest rates. Any non-yielding asset is benefited by declining interest rates. And if there are going to be doubts about how much US interest rates are going to decline, well, then there might be doubts of just how much more appealing gold is than treasuries. But there's also the narratives of longer term global adoption for various reasons, not just the safe haven. There's also the potential risk asset profits, which we are going to start to see as indeed the uncertainty in the market settles down. But
Yeah.
gold versus Bitcoin, another factor to take into account, Maggie, is one, we are starting to see nation states mine Bitcoin. And we know that nation states have been mining gold for centuries, but nation states mining Bitcoin does incentivize putting Bitcoin on reserves. And the difference between Bitcoin and gold on reserves is that Bitcoin can be converted into dollars 24/7.
Mm.
And in terms of retail investment, another big difference between the two is that Bitcoin can be fractionalized. You don't have to buy a gold bar, which is getting increasingly expensive and
Yeah.
potentially out of the reach for many. Sure, you can buy fractionalized gold via third parties, but that's not necessarily the safe haven many retail investors around the world are looking for.
Yeah, that's a great point. I mean, most people access it now through ETFs and through all sorts of other mechanisms as opposed to, squirreling it under their in their basement. So, we've got some questions coming through and I do want to ask them. I do want to ask you, you've been writing about BRICS, which I'm super interested in, and I feel like is a natural segue here, but I'm going to hold off for a minute because I want to get some of these questions in. J&J asking, what are Noelle's ways for dealing with uncertainty in the crypto space? Um, does she use options, hold a lot of stable coins, or something else entirely? I'll tweak it maybe also just to say, like, what are you looking at in terms of instruments as opposed to, we don't give recommendations on the show. So I'll
No.
take it out of the first person. But generally, what's popular in the space in terms of trying to deal with the volatility?
Options are becoming increasingly liquid, increasingly sophisticated, and increasingly flexible. And should we start to get options on the ETFs, then that adds another level of sophistication to the Bitcoin market, another level of flexibility. So options are probably the cheapest way to deal with the uncertainty. My personal way of dealing with the uncertainty, and again, this is not investment advice, is meditation and chamomile tea.
You're a long-term holder. We know, Noelle.
Definitely, I don't trade, but no, the uncertainty, plenty of opportunities, and Bitcoin volatility, as priced by the options, has remained stubbornly low. I was scratching my head about this the other day. I'm surprised it's not a lot higher.
Interesting. So Ralph put in the chat, I don't know if anyone can guess this, the year-to-date performance, Bitcoin versus the NASDAQ. Ralph said Bitcoin's up 51% and the NASDAQ's up 25%.
Yeah,
It's
for
funny,
year
it's
to
easy
date
to
for sure.
forget that because I always hear people in the space talking about targets, and it seems like it's been disappointing, but it's all relative to what you're looking at.
True, and it timing like that time frame, I love my year to dates comparison. They're nice and tidy and it's what we do tend to use in the reports that we publish, but investors don't necessarily think like that, and most investors don't make an allocation at the beginning of the year and wait until the end of the year to see how it goes. So you can choose any time frame and pull out different types of relative performances. Recently, Bitcoin has not been a stellar performer. I haven't looked at the data, but I wouldn't be surprised to see NASDAQ having outperformed. The other day, I was looking at Bitcoin versus gold in various time frames, and Bitcoin certainly year to date has outperformed, but recently not so much.
Yeah, and I think that is the nature of no I always wanna call you something else. No one knows thyself. I always wanna
Yes.
somehow switch those words around, but, he said, "Hi, Noelle," or she said, "Hi, Noelle. S&P and NASDAQ have steady gains over the last 6 months, but it seems like Bitcoin has not followed suit," to your point
Yeah.
about time frame. Why do you think that is? And do you see Bitcoin or ETH responding to new government stimulus?
Yes, to the last question for sure. New government stimulus. Well, U.S. There's two stimuli I'm watching. One is the U.S. money printing machine, to coin a phrase, and a fiscal stimulus is coming. Whoever wins, it's a question of the pace and where it will be allocated. That is also inflationary, by the way, which is a whole interest rates conversation. But
Yes.
there's also China stimulus and stimulus we're going to be seeing in other parts of the world as economies start to slow and they just can't do that anymore. It's not allowed anymore, right? And so stimulus is going to be a factor. And in terms of why Bitcoin is underperforming the NASDAQ, it's largely the regulatory uncertainty. And also, to be honest, it's partly just more education is needed. I do think that people are nervous. As you were saying earlier, Maggie, you're seeing a lot of people nervous, and gold is just easier to understand. That is changing as the education is progressing. The ETF issuers are certainly doing their homework on that front also, especially when we do see now some very large financial houses, BlackRock, JP Morgan, are describing Bitcoin in terms of safe haven. They're pushing that
Mm.
narrative. And so Bitcoin is catching up, but at times of uncertainty, everyone probably reach for something safe, which is gold and registered in RIAs. I was thinking about this the other day. I was chatting to a friend of mine who was saying, no, I don't want to know about Bitcoin. That's just way too scary. And there is that emotional barrier as well. Gold is not so scary. We know what gold is. It's kind of pretty. But
Mhm.
Bitcoin, you mean I might not be able to access my bank account? I might have to flee with what I can carry. They don't want to think about that even. So there is an emotional reluctance to do the homework to learn about it as well. That's going to change again, though, with more education, with more people asking questions, and with the performance that we are likely to start to see soon.
Well, and as you mentioned, the past headlines haven't helped in that regard, especially when you talk about the sort of trading scandal side of it versus maybe some of the underlying technology, which is how I'm always trying to parse them out, you know? And but you mentioned Tether. I mean, there have been headlines. I had read a deep dive on the Wall Street Journal talking about just how large this is and how it is widely believed it is used by a bunch of criminal networks and nefarious actors, with very little transparency and oversight. That was the take from that summary. And now we see this today. Could that be an overhang just like FTX and some of these other blowups were, that keeps that emotional barrier or that distrust of it um, out there still?
The narrative seems to be spooking the market. I don't know what the price is doing now, but earlier I checked and it was dropping, probably on nerves that there might be a problem with Tether. But Maggie, this is nothing new. This kind of fear has been hanging over the market for, I think, ever since I've been in crypto, practically four
Mhm.
years. Tether is so big and it has struggled with bank accounts in the past, and it has struggled with legitimization of its reserves. It has struggled with audits. It has struggled with authorities around the world. But Tether is still standing, and it's used mainly in areas that don't have a lot of choice when it comes to stable coins. And it's also used in areas that don't particularly care about where the reserves are parked and what they're in. They just need the convenience of dollar access. Though a few
Yeah.
years ago, Tether actually admitted that they didn't even have full backing. This was after a particular nasty banking scandal. They admitted they hadn't got full backing, and there wasn't a deep peg. The market didn't really care. Just give me my utility. So I think Tether has been much maligned over the years. I don't see it being closed down, even if the Wall Street Journal report this afternoon is true and it is in some legal trouble in the United States. But to be honest, I'd be surprised if it actually is, because Tether has been working very closely with Treasury Department for the
Mhm.
past years, trying to do the right thing. And we can ask, is it really fair to go after a company that is trying to do the right thing when there are so many traditional financial companies that we know are engaged in money laundering and are not getting the same kind of scrutiny? Another question, Maggie, is Tether is one of the world's largest holders of US
Yeah.
treasuries. Does the
Well,
United States really want it to dump its holdings? I don't think so.
that is such a good point. Talk about vulnerabilities, and the question of could they even, like it's so big now, that That's another big question. So some great questions coming in here. Ralph saying, what nation states are mining Bitcoin? Do we know, or just do we know that there's reports that it is happening on a nation state level?
We know of Bhutan has been doing a lot of Bitcoin mining. They've just recently upgraded most
Mm,
of their mining fleet. We know Oman is doing Bitcoin mining, and the most recent entrant that I've heard of is Ethiopia. Ethiopia is rapidly expanding its mining fleet, and this helps these countries harness the unused natural resources that they have. They're building renewable energy grids using geothermal, using hydropower that otherwise are just sitting unused, and in the process, they're boosting their country's reserves.
wow, that's really
Small
interesting.
economies for now, small economies, but
Yeah.
I really wouldn't be surprised to see that spread because it's an energy efficient use of the resources, and it boosts the financial reserves of the country. It sounds like a win-win.
Yeah. So Boris asking, as we are living in seemingly extreme times, could a barbell strategy in different areas, for example, gold and Bitcoin or energy and tech, be a good strategy for 2025? I think a lot of folks are looking at this, Noel, as a I'm not sure what's going to happen. So it's like the ultimate hedge, right?
Yes, like I said, meditation and chamomile tea, that's probably the best. But yeah, but it would sound good. Energy, of course, I've been wrong on energy before, but my view is that, well, obviously always going to be demand for energy. However, it does look like there's a lot of supply coming on next year. And the question then comes, what is the demand going to be? It is interesting to see the whole talk of fossil fuels heading out the window. Is that's being walked back? Fossil fuels are going to be sticking around a lot longer than most of us thought, which does mean some energy plays are cheap. Again, this is not investment advice, and I am
Mm,
not a macro investor. I just research the macro impact on markets. And in terms of gold versus Bitcoin, obviously a sensible allocation would be some of each because we don't know when the Bitcoin market is going to turn. We do know that when it does, it will outperform pretty much everything else, but that could be next quarter, it could be right after the election. We just don't know. It comes down to a patience game.
yeah. And this is where I feel like the conversations about how to best diversify portfolios are going to get really, really interesting. Because I think like everyone, Boris, and it seems like you're thinking along these lines, feels like there's been a shift. And while there's a place for everything, maybe those percentages look a lot different than they did in prior years. Wanted to get back to the or circle back around to the BRICS, which I mentioned, because it's interesting. We're talking about nation states and what they're doing. Uh, there were some incredible photo ops from the BRICS summit, right, with Putin and Xi Jinping side by side. And you've done some great work looking at what they're doing using some of these, basically trying to come up with an alternative for dollar trade, right? Are they making progress on that?
Yes, definitely. I know that we've seen reports of Putin walking this back, but he just doesn't really want to attract a lot of attention on this right now. The BRICS members have agreed to explore an alternative to SWIFT. And for Russia, this is obviously urgent because when the Russian banks were kicked off of SWIFT after the invasion of Ukraine, it became so much harder for their trading partners to either receive payment for or to pay for Russian goods. So it's there are ways around it right now, but it's complicated and expensive, and it is hurting trade. The ways around it right now are one, stable coins. That's one way that trading partners are paying for Russian goods. Don't have to go through banks necessarily, except for the conversion on the other side, of course. And two, connecting. Sorry, these things always fall out. Two, connecting to the systems of neighboring countries, the banking systems of neighboring countries. So Russia is finding ways. It's complicated for everyone. So the BRICS do want to find an alternative. And it's not just Russia that's pushing for this. Obviously, China is very interested, Iran, very interested, but even Brazil and India have said, yes, we're totally in because trade is sort of shifting. It's becoming slightly bipolar, if I can use that phrase. We've got
Mm,
the US axes, we've got the Asian axes. And so they do need an alternative, especially if the United States is going to, as I mentioned earlier, continue to weaponize access to the US dollar. Now, what that's going to look like, that is an interesting question. I don't know if you saw today, Maggie, the announcement that HSBC is joining the CIPS network, which is China's internal equivalent to SWIFT. China
mm.
and Russia have both built alternatives to SWIFT already because they've needed them for internal use in some trading corridors. HSBC is now joining China's network. And we're going to start to see other banks do the same as well, especially as they want to increase trade with China, because who doesn't? But not just China, other regions within China's influence in Southeast Asia. And obviously, China's economy is slowing, but 4.5%, still quite a lot. It's still a very attractive trading partner to have. So, but that is in the longer run, if I can just extend this a bit more, that is
Sure.
not going to debank the dollar from its throne, but it is going to dent global demand for the US dollar if various countries do start to trade increasingly in local currencies, or even if not local currencies, other currencies. India, for instance, is paying for most of its imports of oil from Russia, not in yuan, not in rubles, not even in rupees, but in United Arab Emirates dirhams. For some reason, that's what they've agreed on. And countries, are trading partners, are finding ways around the dollar problem that the United States has brought upon itself by using this as a global geopolitical weapon. It's going to be material longer term. Short term, no, but longer term, yes. And this in turn is going to be material for the price of the dollar relative to baskets, especially those containing hard assets.
Yeah. I think this is so important to really pay attention to this, but it's easy for people to sort of run to the extremes, right? And a cash asking, and you're not to suggest you're running to extreme a cash. This is a great question, but does Noelle believe the US dollar reserve currency is under threat? If I hear you, Noelle, you're not saying that it's imminently under threat,
No.
but that these are developments which should be taken seriously, unlike maybe some things in the past, which seem to be suggestive, but not really getting a lot of traction. Now, these projects seem like there are a lot more countries involved. And did I understand you right in your Substack that it's being built on rails that actually the Europeans came up with as an experiment? The
Europeans,
BIS? Is this like a system that they were working on that they've just kind of sort of taken and it seems to be getting a bit more real, or am I putting words in your mouth?
yeah, no, it's separate systems, but the Europeans have also in the past mentioned that they want to find an alternative system. The German Ministry of Finance a few years ago said, we need a better alternative than SWIFT because we do not want to be beholden to the United States. Now SWIFT is not doesn't belong to the United States. It's owned by 11,000 banks. Its headquarters are in Brussels, but the United States controls SWIFT effectively. And
Mm.
going forward, that is probably going to put a lot of nations in a rather uncomfortable position if they want to continue to be able to choose their trading partners. And who knows where that ends. No, I don't think, to answer the question, I don't think the United States status as the global reserve currency will change. Certainly, probably not in my lifetime. 50 years from now, who knows? But
Mm.
all it would take for a revaluation is a dent in demand relative to supply. And this brings us back to what we were talking about before, the fiscal stimulus. Supply could be increasing rapidly in coming years, partly not just because of the fiscal stimulus that we know is already on the table, Maggie, but also if we are heading into a world with a less clear geopolitical authority,
Mhm.
then that is going to increase military conflict, as we are already seeing. That is going to increase defense spending necessarily.
Yeah. It's a really important to watch all these bigger picture themes because I think the past has shown us that sometimes it's the cross currents when they come together, right? It's not one giant event. It's often a series of things that spark off concern or worry or a freezing up of the financial system. And when we're talking about sort of big issues like this, I think it's so important to keep it on the radar.
It's a
Noelle, you
big
always
jigsaw
keeping
puzzle.
us. What's that?
It's just a very big jigsaw puzzle. And just as soon
Yes.
as you think you got it figured out, someone hands you another piece. Plus, it's changing all the time, which is fascinating. Going back to the dollar question, I was digging a bit into the history of de-dollarization, and it's been talked about since 1960. Back in 1960, experts were saying this is the end of the dollar hegemony. And, here we are, it's 80 years later, and the US is. So, like, what we're looking at now, though, it is different, Maggie, because there are new rails in existence and there are new imperatives to find them, and there are new technologies that can make this simpler. I'm not saying we're all heading into a CBDC world. I'm not saying that Enbridge is going to become the network of the East, but they exist, they're being explored, and it's just getting easier to innovate on payments.
Yeah, that's why it's so important, because you've got technology coming together with this theme that we're used to ignoring because it's been Chicken Little. It's been out there for so long, but really important threads for us to pay attention to. And thankfully, you're writing about them all the time. So we
It's so
appreciate.
interesting. It is seriously, it just gets more and more interesting. Terrifying, but really interesting.
Yeah, but the more educated we are, the better decisions we can make. Noelle,
Indeed.
fantastic to have you on as always. You can find Noelle on Substack. Drop her a note there. She's super responsive. And as I said, she's always digging into all of the intersection of these really important worlds, which we all really need to pay attention to. So thanks so much. Thanks for the great chat and the great questions, everyone. Wonderful to see you there.
Thanks, everyone.
Thanks. Have a great weekend. We'll be back on Monday. Enjoy yourselves. Hopefully, it's beautiful weather where you are. And as always, take care and good luck out there.